morning or good evening. All right, I thought I'd hop on just quickly. I mean, we'll get a good like half an hour out of this one. Should be plenty of time before I have to go to work. So just wanted to pop on and talk about the structure that we're dealing with. Oh, and also a follow-up to yesterday's hypothetical position that we got into. It stopped out. But the cool thing was that, so we started it here, yeah? So I'm just diving straight into it and getting straight to it. we got in here for a short. Price went sideways. So we were in profit. It was in the profit zone for quite some time here. There was even a really nice drop here. There's nothing saying you couldn't have taken profit there if you were in it. Obviously the target didn't get hit down here, but that's okay. All good. The other thing you can do as soon as you get in and you start going into profit, you can even set your stop loss at break even so that you don't lose money. That's another way to sort of approach this. You don't want to cut off the opportunity or the possibility that price has to make any kind of profit. You don't want to get stopped out too early, but just when you get candles moving a fair way away, at least, like a good example is down here, you can shift your stop loss from being up here to a break even, or at least a little bit in profit, like a bit in front, you know what I mean? So either way, it wasn't a great trade to take. And I'll go into why that's the case. So now that we've done that, let's delete that hypothetical trade. It got stopped out. And let's zoom out. So that trade was taken based off this downtrend that we had. So we were sort of counting on this holding as resistance. This yellow downward trend line, and then seeing a further leg down, except we've broken out, and it's because of this. If we zoom out to the 4-hour chart here, we've been dealing with this trend here. So we've had our lowest point on the chart, we had a higher low here, so this is on a higher time frame, and then we've come up, found resistance, and then look where we bounced. It was, we're bouncing off this trend line once again. This blue rising trend line here. So that's what I'm looking at. Now, another interesting thing I wanted to cover was swing failure patterns, or liquidity grabs. Let me turn off these levels here just so that we can focus in on, just gonna see if that, yeah, that's the majority of them there. Okay, I don't know where this one lives. Okay, yeah, this is good. All right, so out on the 4-hour chart is what I'm gonna do this by. And okay, this is the FTX crash. We pulled in a low down here. So I'm going to draw a line of support there. Make it a monochromatic color. And what happened? What did price do? So we hit this low, yeah? Rallied up. There was a nice bounce off there. Came back. There's all this price action, right? We came back to retest that low to see if it's going to hold. And we wicked through that. See how we just wicked through it on many time frames. Let's go scan that. So it was only a wick. Obviously on the daily, it was just a wick. Yeah, just the wick there, below that line. On the 4 hour, just a wick. On the 1 hour, just a wick. On the 15 minute, just a wick. Let's just double check that. Yep, just a wick, yeah. 5 minute. So we're really getting down to the small time frame here. Hopefully it'll let me go. Yeah, here we go. It's just letting me show you guys before I run out of candles. So I'm not going to be able to see it on the 1 minute, but anyway, you can see even down to the 5 minute, this was just wick below that line of support. So what does that tell us? It's basically just saying that that move down, that extra push that price did, was for the sole purpose of grabbing liquidity, so liquidating longs, and stopping out people that had their stop loss set just below the recent low. Yeah. So I've identified a few others as well. So not as major, but they are there. So yeah, going forward, I'm certainly going to pay attention to these lines of support and resistance, and we're going to see how price behaves as it approaches that line of support and resistance. Shout out to Let's Mars, Jack, Honest AF, The Ancient Wonder, Greybeard. Thanks for tuning in, guys. Appreciate that. So the other examples that I was referring to, let's have a look. I might jump up onto the 4 hour chart to do this because it's going to be a lot cleaner to follow. But you can find other examples of these swing failures, right? So we see a pivot here with a just wick, right? And you can see, oh yeah, that looks like it was probably a liquidity grab. And you can find where it came from. It came from this low here. So see how we got the retest, bounced off it, and then market makers, or the smart money, pushed it beyond to grab any stop losses that were set, below that support. So that's another example. That's number 2. So there's 1, there's 2. Now we've got another one as well recently, just very recently, right here. Look at that. There's 3. So we had a low, and then we swung just beyond it with a wick to grab that liquidity. So the point I'm getting at is, this is a good way to find an entry into either, it can be a long or a short, like depending if it's, you're looking at supports or resistances. But, in these examples, these are supports, obviously. So you would look for long entries. So when you find evidence of a candle wicking down below through a support, but then closing above it, that's like a little hint to say, oh, that was grabbing liquidity. I'm going to open the long. Like, it doesn't really matter, but just somewhere in that structure there, you can open a long. Somewhere in this structure, after that liquidity grab, open a long. And then somewhere, especially somewhere in here, there was a lot of hours here where you could have entered a long based off this behavior, right? So that's something. Moving forward, I'm going to look for those opportunities and I'm going to call them out. Now, the way to protect yourself by going in is, okay, let's go down to the 1 hour chart and use the first example here is this one. Okay, we've identified where our trend line is, our support, right? We wicked through the support but closed above it. So that's condition 1 met, right? Condition 1, we've got permission to enter along. So, it doesn't really matter. The lower price you can get, the better, but enter along somewhere in this block, yeah? Let's say, okay, we don't know what the future holds here. We swung below it. Okay, cool. Confirmation that this support has held, even though there was that dirty retest there, that swing failure. So let's say we just get in late. Let's say we got in like up here, like around there. Like it was a, you know, not the best entry, paid a bit of a premium for that entry. But the important thing here is, okay, where do we set our stop loss? Like we don't want to be in it if this whole like setup fails, and it would fail if price goes lower than there, below the swing low, the recent swing low, yeah? So set a stop loss a little bit. You want to give it a little bit of room to breathe, but just below this recent swing low is where you would set your stop loss for an entry inside this overall structure up here, yeah? So that's, you know, that would have been a nice trade, obviously. I know hindsight's 2020, and this isn't bulletproof. No strategy is bulletproof. Like you can always, and that's why we have stop losses to protect us from when it fails, like when the pattern fails. Another example here, we had confirmation. This candle closed well above the support. So, you know, enter somewhere in this structure. You had lots of time. This is hours, right? Each candle here represents an hour. So there's hours and hours to enter some kind of position. So let's just, you know, call it here. Stop loss here. Stop loss below the recent pivot, the recent swing low. So when you, it's all about these swing failure wicks. When you identify the wick, enter a position in the direction of the pivot, and then set your stop loss just beyond the wick there. Price rose up. We get another example of it here. Okay, wick through previous low. Enter a position somewhere in this neighborhood. Stop loss just below here. And then, yeah, ride the price action if it happens, right? And obviously, this could have happened by all means, like this, where it breaks that structure, it breaks and it commits to a downtrend, right? So that's, yeah, you would just get stopped out, and then you would hunt out the next opportunity. Now for shorts, I guess we're approaching a top side here. Let me see if there's any examples. All right, here we go. Here's a top side line of resistance. Let's go back to the theme we were using before. Okay, so there's a couple of liquidity grabs there. There's a big one there. See, this has been treating the longs really nasty. Like if you've been using this pivot, this has been liquidating people. Especially, look at all that action above that trend. So now I would say we wouldn't be paying as much attention to this line anymore because of how much action we've had above it. So that line's now sort of like out of date, I guess you could say. So we want to move it to somewhere more relevant. Like even this has been dealt with by price. Price has smashed that. You can see price has definitely smashed that here with these like candle closes above. Let's check the 4 hour because maybe it was just wicks. Yeah, 4 hour, it was a swing failure. So that would have been a nice entry there. You had wick above the previous resistance. So you wait for it to calm down and come back under. You know, this green candle closed below that resistance line, but then there was, you know, some people may have entered off that and then got stopped out because you got another push. Actually, one minute, no, they wouldn't have. If you entered on the close of this candle, which closed below this resistance, your stop loss would have been at the wick, right? So like that stop loss. And let's say you entered here, you would not have got stopped out with this wick here. You would have been okay. It would have been like, yeah, you would have gone negative, but it did not go beyond that. So that's okay. That's a short that worked out. You know, that's a confirmation of a short. Now, all right, we've dealt with that. So what's the most recent pivot that we should be paying attention to? It's this one here now. This is the resistance that we're dealing with. So as price comes up here, like it looks like it's on its way for sure. This would be the resistance line we're dealing with on Bitcoin. Now that is 17,423. There's every chance that Bitcoin could come up here and swing failure through it and cause a wick. We could cause a wick, and if we wick and don't get candle body closes above that line, like if we're only getting candle body closes below, that's a really good short opportunity. So enter a short below resistance and set your stop loss at wherever this may wick. So now when you don't get into a short, the conditions that you don't open a short is when you start getting like higher time frame candles closing above this resistance, because that would be confirmation of a breakout, of a break of that resistance. So hopefully that makes sense, guys, and hopefully it's helpful. I'm going to be paying way more attention to market structure now moving forward, like lines of support and resistance. I think it's going to be a lot more beneficial and simple. Like, how beautiful is it? It's just so simple. Like, you know, you don't need all these crazy like oscillators and indicators. All you need is a chart and your drawing tools. Simple, like a line. This is all you need with TradingView to make it work, to make this to make trades happen. You know, it's just basic support resistance. You can see we've been dealing with a bunch of rectangles, really. Like, you know, you sort of identify it here. That's kind of a box there that we were trading in. There was a box here. So if you just divide the chart up into like channels like this, you know, something like that, you can open positions on the wick through those rectangles. See, we seem to be wicking, you know, each time. So now that I mentioned that, it's like you can really draw these rectangles to more closer to the candle bodies rather than the wicks. And then, you know, your wicks are your triggers to like prove that, oh yeah, price, yes, it wicked through it, but we have not had any candle body closes outside of the rectangle yet. So breaking the rectangle is when this happens. See how we'll use this middle rectangle. See how there was a really strong push through this box. So that's confirmation that this box is now out of play. Like, you know, this rectangle is not giving us shorts anymore. There's no short opportunities because we've broken the resistance. Same on the downside. Like when you break support, you know, you're no longer looking for longs. And here's a good example of that. So this rectangle is a bit strange, but at least the bottom side is clean, right? There was a rectangle going on here. And obviously, you know, this is cherry picking a little bit because it's the FTX collapse. But the top side, it's hard to sort of draw out. You know, this would attract a lot of people because if FTX didn't happen, if this black swan didn't happen, this was looking like we broke out of a rectangle, a consolidation, yeah? This was actually looking really good and optimistic because we were getting like, this is the 4-hour chart. We were getting a lot of activity above, especially with that big fat green candle right there. That was a very committed move above that resistance. So unfortunately, you know, the black swan events do happen and we totally came back. Not only just came back into that rectangle, but we smashed through it to the downside. So maybe that's not a great like everyday example. Like you don't get black swans every day, that's for sure. All right, here's a better one. There's two here. Look at these rectangles. Rectangle here. Rectangle over here. And like you can identify the rectangle right before the price breaks out of it just by going by the candle bodies and the behavior of price inside what that seemingly that range is. So in this point, in this instance, we're looking, okay, are we going to break support or are we going to break resistance? And then you trade to that. So bang, really committed breakdown. So that means obviously you can no longer take longs inside that rectangle, and you're looking for the next like point of structure. And it looks like there are a couple that exist probably on the lower time frames, but like down here there was probably a box, right? Something like that. And then another one up here, something like this. That was like probably a series of smaller channels like this. Like something like that. But yeah, this one broke in a very obvious way. This red candle smashed through, and you know that, okay, that structure's broken. Anyway, yeah, trading out of rectangles seems to be pretty straightforward and simple. It's just support lines of support and resistance. And then if you really want to dial into trades, go down to a lower time frame. So let's just focus in. Let's hone in on the here and now. Let's delete all this stuff. You know, because these are all done, said and done, I suppose. Obviously, this is an SR because there's examples of resistance on this line, and also support now. So you know, roughly in that neighborhood. So I'll keep that there like that. I'll leave that there just for, you know, to sort of denote the low. Anyway, let's zoom in. Let's see what we got. So we're on the 4 hour. Let's go to the 1 hour chart. I think this line deserves to move up here at least to where the candle bodies are closing, the 1 hour. This does look like, if we probably go down to the 5 minute, it looks like we've got a bit of a bull pennant going on here. So I'd be keeping my eye on that. What have we got? Less than an hour until the daily candle close. So we'll see, you know, we'll see whether this breaks out or not. So that obviously the textbook break of this structure is bullish. You know, uptrend, consolidation, continue up. That's the higher probability. Remember, not a guarantee, just the higher probability of that structure. There. Sorry, I know I'm a perfectionist with the lines, but it's very pretty. So yeah, really symmetrical triangle right now on the 5 minute chart. Breakout perhaps. At least, I think at least we're likely to get a test of these highs here. Check out that double top though. We're down on the 5 minute chart, yes. But look at this double top here. So we had resistance, swing back down, and then resistance again. Double top. I'm gonna put a Fibonacci on this thing. and see if there's any kind of rhyme or reason why we pulled up right here. Like, what the hell's that? Why did we pull up there? Let's use a ray or a horizontal. Yellow is good because I want to be able to see it. Okay. Not quite a test of the previous high as support. Didn't go that deep. But yeah, I think before I have to go to work, we should be able to see we're going to get a break either down or up of this pennant. And we're going to see how it behaves. If it does break up, we want to see how it behaves at this resistance line, this horizontal. And I think it's about to break out now. Maybe. Let's see. I don't want to say anything about what it is or isn't going to do, because we'll just let the market make those calls. But all we can do is anticipate patterns and lines of support and resistance. I think that's the best thing to do moving forward, rather than saying what's going to happen. It's still okay to try and forecast what might happen, but yeah, I'm not gonna paint anything into a corner. Just gonna check a couple of messages here. Right. Here we go. So the final hour of the day, what is it going to bring? There's 20 of you in here. Thanks for showing up, guys. Appreciate that. Remember to smash the like button. Hit subscribe, hit the bell if you haven't already. I'm just going to change the song. It's probably my favorite one out of this list. What's up, Gigi? G'day, Miguel. Whoop, not quite there yet. Out of interest, let's check out the 1 minute chart. See if there's any shenanigans going on the 1 minute. Not quite yet. This potential breakout has not ended yet. Back testing, right? It could be a liquidity grab, like a short time. We're on the 1 minute, remember? This happens, you know, even on the short time frames, there are liquidity grabs. Look at that, right there. It may not last for long, like this little shift down, but yeah, look at that. So now that we've grabbed that liquidity, let's see if there's any kind of gaps that it needs to fill. So in B's channel, there's a couple of dudes in there that are really dialed in and looking at this this way of analyzing the chart. And they've probably been doing it for a while now, but they're definitely onto it. And I now see the light with that method of analyzing charts as well. And that's not to say that the other methods that I've covered in the past are wrong. They're just different. Like, it's a different approach, and they still produce results. But I think this is a lot more fundamental to what's happening. I think it's a lot more powerful. That's in my opinion. So, you know, on the really short time frames, you can see that it came off this pivot here, yeah? Like, this is the zigzag. So if that is the case, you can do a fib retracement and see if it's going to like find support or bounce off any particular level. Oh, Miguel, thank you. $5 super chats. That's very generous. Appreciate that. Thank you. All right, so we've got a corrective move. Bit of a fake out, hey? If you're breakouts are risky. If you're trading breakouts, it's kind of risky. What I've found that happens more. So I feel like, okay, if you're gonna order things in priority, it seems to be that patterns take a backseat. Lines of support and resistance, like the horizontal, strictly just horizontal lines, are #1 priority. Like they, when you hit a line of resistance, that's very powerful. Like it's something that you should pay attention to more so than any kind of potential pattern. Patterns are okay. You can still like look at them and identify them because they can still produce a result. But yeah, you wanna keep your eye on support resistance. All right, this is interesting. It's very volatile. It's very choppy at the moment. There's no like real super clean trend just yet. I think we're still squeezing. So it looks like, okay, there was a push down. Maybe, yeah, no, I'm going to leave it at that low, but I'm just going to check this low as well to see if there was any, no obvious level really as to why it turned around there. I think it maybe, because we're on such a small time frame, it's probably not really paying attention to Fibonacci levels per se. And yeah, I think the relevance of the 1 minute chart is not that strong. Like it's still got its place, like depending on what you're doing. But yeah, I think maybe if we dial it out back to the 15-minute chart, you can see it was just like a potential retest maybe. Either way, we are still squeezing. There's still potential that we break out here to come up and test this line of resistance. I think it's still, the likelihood is still strong, even though we came back in for that brief moment, right? On the 1 minute chart. We did this little dip back in. Yeah, here we go. Coming up to retest the tops of these candles, the wicks. Yeah, it just broke it. I'm just going to amplify this so you can really see what's happening. So the big test of, I believe, are these wicks here. So 1, 2. The reason it's a stronger sort of line of support of resistance is because it's these very clean touches by these two candles. Yeah, it's very solid. We're not there yet. This could still like do a bunch of like rubbish, like before it commits. But yeah, we'll see. It could still fail, like totally. There's always the opportunity that it could start going down too. But my bias is leaning more toward up because of the momentum that we came into this consolidation. It is a bull pennant of sorts, bull wedge. And seeing as we are 40 minutes out from the daily close, maybe that's got something to do with why people are sort of holding off. Maybe that's a theory. It's just a theory. It could, yeah, it could triple top, yeah. And the thing is, yeah, with patterns, you sort of have to stay, like, I guess, mutable, for lack of a better term. And by that I mean, like, when you get new information, you should be adjusting. But see, you know, and that's the beauty of lines of support and resistance, is you don't have to adjust. It's there, like, it's solid, you know? Whereas with patterns, it's more a bit of an interpretation. But yeah, this is still painting out. I mean, this could even turn into something like, let me just undo this. This could turn into something more like this, you know? We just don't know yet. And this, you know, maybe we get a bit more of a push higher to bring this line up, but for now, this is the parameters. This is like the structure we're dealing with. All right, this seems to be some kind of pivot. Price could come down here and create another pivot somewhere. Like, let's just, for example, say it's here. And then that would lock this line in to that, right? We'll see, we'll see. Anyway, I'll leave these as is. These little small time frame patterns. But I think what we need to pay attention to is the swings, the recent swing lows and highs. So I'll lock it onto that point, get it horizontal. Okay, there we go. So I guess, you know, obviously the higher time frame candles are going to be more important than any kind of time frame that follows that below. So, you know, the 15-minute, the 5-minute, and the 1-minute aren't going to be as influential as, say, the 1 hour and the 4 hour chart. So 4 hours still, you know, there's just this brief pause here after this push up. And you see that all the time. Like, look, push up, pause, push up, pause, push up, you know, resistance. Same on the way down. Push down, consolidation. Push down, consolidation. Oh, pivot, push up. So right now, yeah, obviously we're in some kind of consolidation. Now, in a downtrend, you're dealing with likelihoods, right, of these consolidations. So you get move down, consolidation, move down, consolidation. The textbook, like, I guess if you're following trend, move down would be the natural, the higher probability. It's just in this case, it got invalidated and it moved up, so it pivoted. So that downtrend finished, especially when this happened, when this previous high got broken. So it's like a change, what's called a change of character or market structure break. See, remember yesterday I was talking about trend. The thing that matters in an uptrend and that defines an uptrend are the lows, not the highs. The lows define an uptrend. You know, the highs can get lower, but as long as those lows are getting higher, it's still an uptrend. You know, that's an uptrend. When as soon as you get a low that goes lower than the previous low, that's the break in structure, in market structure. Oops. That's the break in market structure. So, and to depict that, put a dotted line there like that. So that's the break in this structure. So uptrend to downtrend. And then in a downtrend, it's the tops that define a downtrend. So downtrend, it's the tops, it's the highs that define a downtrend. The highs getting lower, yeah? As soon as you get a high that goes higher, that's the break in the structure. So if I was to type it out as a rule, lows define uptrend, highs define a downtrend. It's when you break that combination is when you've changed the direction. And obviously, if you zoom in, if you can identify structure on the 4-hour chart like this, right? That's fine. And obviously, if you zoom in, let's go to the 5-minute chart. You're gonna get examples of an uptrend during this, like this swing down here, because there's microstructure within that. You know, there's this. But that doesn't invalidate that as a structure break, because we're looking at the key pivots. This pivot here going down to this pivot here, that's still an overall continuation of the structure. Just because we got a higher high here, see how that went higher, that did not break this structure because we have not come up higher than that, if you get what I mean. So it's like, yeah, context matters, time frames matter. So yeah, someone brought that to my attention earlier today, that okay, what about a bear flag? A bear flag's lows get lower in an uptrend, right? I mean, sorry, a bull flag, a flag, let's just call it a flag. So isn't that a downtrend? Not necessarily if you look at it like this, right? These are the move is this: up, down, up, low, higher low, high, higher high. So just because there are a series of lower lows here, that doesn't mean that the structure's broken. It's because, you know, you're dealing with a smaller section of the overall zigzag. It's like you've zoomed in. And this is why high time frames, or sorry, lower time frames are less significant than high time frames as far as like structure is concerned. A higher time frame structure is going to trump a 5-minute structure. Like, you know, like an hourly structure is going to be more influential to direction than a 1-minute structure that's going on, as an example. And then, yeah, I guess if you think about zigzags, wait, let me show you on the chart. So this zigzag is a very like big, you know, it's quite, you know, you can ignore all this action in there. You can class that as accurate, you know. That's not wrong. It's just, it doesn't have the sensitivity as if you went something more like this, like down to that low, up to that high, down to this low, up to that high, down to that low, up to that high, down to these lows, up to that high. You know what I mean? It's just that this is more sensitive. This is following price more close. So you have to figure out like what level of sensitivity of the chart you're looking at. Are you looking at, I'm going to change the color too, just so you can differentiate. Are you looking at the blue one or are you looking at the yellow one, like the less sensitive structure? Anyway, let's go back to our current price action. You can see, oh yep, there's resistance that got found. Are we gonna hold this trend here, or is it gonna break as far as the pattern is concerned? All right, I really gotta take off and get ready for work, but hopefully this has been worth your time tuning in just for this little update. Can you see evidence of a bull flag here? Yes, I can. Let me check. Let's look at this. Potential bull flag, maybe. If this pennant doesn't hold, there's an opportunity for flag, like this flag here, coming off that flagpole. So, you know, it's not over yet. I mean, the wedge, this triangle's not over yet either. It's still, that's still playing out too, but yeah, we'll see what happens. All right, ladies and gentlemen, thanks for tuning in, and I'm probably going to try and stream when I get home from work, so like a few hours before the stock market opens, just for change it up, something new, something different. You know, when the market really picks up, I'm gonna maybe try and stream twice a day. So once at my morning, once at my night. So that'll be like your night and your morning. So yeah, daily candle close for crypto and daily market open for the New York Stock Exchange. So two ends of the spectrum there, two streams. What have we got coming up? We're right here where the green arrow is. 11:30 p.m. tonight is the next thing that's coming up, the PPI, Producer Price Index. So it's another figure that's looking at inflation, basically. All right, so that's I'll basically be streaming when this is happening tonight for me. Tonight for me, tomorrow morning for you. Yeah. All right, so I'll see you in about 12 hours. All right, thanks guys. I'll catch you in about 12 hours time, roughly. Take care. Have a good night. Sleep well. Catch you tomorrow morning.